What if I told you that it's possible to make housing affordable for everyone without causing a collapse in the economy? As home prices soar, many are left wondering if there's a way to strike the balance between affordable housing and a healthy economy. Can it be done without one crashing the other? Stay with me until the end to uncover the challenges and solutions behind making housing affordable without ruining the economy. Today, we will talk about how we can make housing affordable without ruining the economy. Before we get started, make sure to hit that like button and subscribe to my channel. 1. Why housing costs so much. Housing has become increasingly unaffordable due to a severe supply-demand imbalance. Simply put, there aren't enough homes where people want to live, resulting in fierce competition for available properties. This has pushed home prices higher, making it more difficult for many to find affordable housing. A major factor contributing to this crisis is restrictive zoning laws. These regulations often prioritize single-family homes over denser, more affordable housing options. Rules that require large minimum lot sizes, height restrictions, and specific architectural features raise construction costs, making it difficult to build more affordable homes in desirable areas. Construction costs have also skyrocketed in recent years. Factors such as supply chain disruptions and a shortage of skilled labor, which started after the 2008 housing crash, have driven up the price of materials and increased construction time. This has further limited the number of new homes being built, exacerbating the housing shortage. The financialization of housing has added another layer of complexity. Institutional investors increasingly view residential real estate as an investment asset, buying up properties and competing with families looking for homes. This shift in how housing is viewed, more as an investment than as shelter, has contributed to rising prices, especially in popular urban markets. Interest rates also play a critical role in housing affordability. Low interest rates in the past allowed buyers to take on larger loans while keeping their monthly payments relatively stable. This drove up demand for housing, leading to higher prices in many markets. As rates rise, affordability could worsen, making it even more difficult for many to enter the housing market. These factors combined have created a challenging housing landscape, making affordability a growing concern for many families. 2. If prices crash, the economy hurts. While high housing costs are a significant issue, especially for younger generations, a sudden collapse in housing prices could have devastating consequences for the broader economy. Housing is the largest asset class in America, with residential real estate valued at tens of trillions of dollars. For most homeowners, their house is their largest investment and the cornerstone of their financial security. A sharp drop in prices would erase considerable household wealth almost overnight, severely impacting consumer confidence and reducing spending. The banking system is closely tied to housing through mortgage lending. If home values fall well below the loan balances, it could trigger a wave of strategic defaults, similar to the 2008 financial crisis. This would put banks at risk of insolvency and could freeze credit markets, making it harder for individuals and businesses to borrow money. Local government finances would also face a significant blow. Property taxes fund essential public services like schools, police, and infrastructure maintenance. A decline in property values would result in lower tax revenues, forcing governments to make painful budget cuts and potentially reduce services. The construction industry, which employs millions of people both directly and indirectly, would be hit hard in the event of a housing market downturn. Developers would be reluctant to build new homes if they couldn't recoup their costs, leading to widespread job losses in the construction sector. This would also affect related industries such as appliance manufacturing and home improvement as demand for new homes and renovations drops. Ultimately, while the high cost of housing poses challenges, a drastic decline in home prices could trigger a cascade of negative effects throughout the economy, making it a dangerous scenario for many sectors. 3. Building more could be the answer. Increasing housing supply is the most sustainable and practical path to making housing more affordable without triggering economic disaster. Instead of relying on abrupt price reductions through market disruptions, building more homes allows for a gradual moderation of prices while ensuring stability in the housing market and broader economy. One of the most effective strategies involves reforming local zoning laws to allow for more diverse housing types in areas where demand is highest. Many cities still rely heavily on single-family zoning, which prohibits the construction of duplexes, townhomes, or multifamily units in areas that have high demand, such as those near good schools and job opportunities. Expanding the types of permissible housing in these neighborhoods can help increase supply exactly where it's needed most. Building taller and denser housing in transit-rich areas should be prioritized. Locations that are well served by public transportation are ideal for higher density development as they reduce dependence on cars, lower environmental impact, and provide a more sustainable living environment. This approach maximizes the use of available land while addressing both affordability and sustainability. Another important reform is streamlining the permitting process. In many regions, navigating the maze of zoning approvals, regulatory requirements, and potential legal challenges adds significant delays and costs to new housing projects. These additional hurdles are ultimately passed on to buyers and renters, making housing even more expensive. Simplifying and expediting this process would encourage more construction and keep costs lower. Additionally, adaptive reuse of existing buildings presents a valuable opportunity to create housing quickly. Many commercial properties, especially office buildings, are now vacant due to shifts in work patterns. Converting these spaces into residential units can provide new housing options without the need to build from scratch, and it helps revitalize areas that might otherwise remain underdeveloped. These policy changes would go a long way toward addressing the housing shortage and making housing more affordable without risking the economic instability that a sudden drop in prices could cause. By increasing supply thoughtfully and sustainably, we can create a more balanced housing market that benefits everyone. 4. Helping buyers without breaking the market. While increasing housing supply is essential for long-term affordability, targeted assistance can provide crucial support to individuals in the short term, helping them access housing without contributing to market inflation. Down payment assistance programs are one of the most effective tools in overcoming a major barrier to homeownership. Many potential buyers can afford the monthly mortgage payments but struggle to save for the large upfront costs due to high rents and living expenses. These programs can ease the burden by covering part of the down payment, enabling more people to take the first step toward owning a home. Community land trusts provide another innovative solution for maintaining long-term affordability. In this model, nonprofit organizations retain ownership of the land, while the homes built on it are sold to buyers at a significantly reduced price. This approach lowers the cost of homeownership, making it accessible to more individuals, while still allowing homeowners to build equity over time. The land trust ensures that the property remains affordable for future generations. Shared equity programs offer another promising solution. In these programs, a public or nonprofit entity co-invests with the homebuyer, often in exchange for a portion of the property's future appreciation. This reduces the upfront cost of purchasing a home, making it more accessible, while also allowing both parties to benefit from any increase in the home's value. This model strikes a balance between providing affordability and allowing for shared financial gain. Additionally, financial education and housing counseling significantly improve outcomes for first-time buyers. These programs offer guidance on budgeting, mortgage options, and understanding the total costs of homeownership, helping buyers make informed decisions. Proper education ensures that new homeowners are prepared for the financial responsibilities that come with owning a home, which increases their chances of long-term success and stability. Together, these targeted assistance programs create opportunities for individuals to access affordable housing while addressing the underlying issues of supply and market inflation. What do you think of our video? Let me know in the comment section below. Also, subscribe to our channel before you go. Thanks for watching.